Hello and good morning, neighbors. Welcome back to the neighborhood. If this is your first time, you, my friend, have found your place. This is a place where we, me being the teacher, us being the learners, are going to learn the stock market and how to trade, hopefully successfully, hopefully to get rich. I'm Squealer D, and I am back again in the wonderful world of finance. And bam, we are here to learn. I do not have my light on, and I'm looking really dingy today. Hold on, guys. Let me pop this light on. You get to see behind the scenes. There we go. Light.
Let there be light.
And then there was light. Alrighty, guys. Whew, I need a light to be able to see in the morning. I feel so, light will wake me up. Okay. We are looking delightful on my end, guys. Hopefully everything's looking and sounding delightful on your end. I am ready to go. I have our daily learning up. We're going to learn about stock chart patterns today. I have my handy dandy little book, guys. And I hope that you have one too by now. And I hope also that you are already signed up for Think or Swim, which is the program that we are going to be using to trade. So hopefully you are signed up there and we can log in today and perhaps make a trade together. So first we are going to do what we always do or always say we're going to do and start out in the news, guys. Start out with some learning news. Amazon CEO warns about short-term headwinds in key AWS business. What's a short-term headwind? I mean, I know obviously a headwind, guys. The Amazon Web Services business that Amazon CEO Andy Jassy used to run is starting to suck wind as the economy downshifts and competition from Microsoft and others in the cloud intensifies. Despite growing 29% year over year in 2022 on a $62 billion revenue base, AWS faces short-term headwinds right now as companies are being more cautious in spending given the challenging current macroeconomics conditions. Jassy acknowledged in his second annual shareholder letter on Thursday. So you guys, we can read, remember, shareholder letters are things that we should know about and read in order to understand stocks. So, common stock, trading symbol, Amazon, name of each exchange, NASDAQ Global Select Market. And this is his letter. Well, we got 14 pages. It's all official. Senior Vice President David A. Zablowski. What kind of last name is Zablowski? He seems like he's related to somebody. I gotta look up his name, guys. This is part of learning too, is learning who we're reading about, guys. If we can't learn Sapolsky. David A. Sapolsky. He went to the school of law in Seattle. Guys, he's a Pacific Northwestern person like me. University of Washington. He went to the UW School of Law. Huh. Heritage. See where he came from. Zipolowski. Okay, well, nowhere just tells us. This guy's a neuroendocrinology researcher. Wow. And his name is Sapolsky. Okay, well, that didn't help me. I think Sapolsky, I don't know where it's from, but it's from another country. I don't know. I was just curious. If you know and you find that out, you let me know in the comments, in a message. I want to know. So, let's try a shareholders message, guys. They might be great. This was our very first real shareholder message. Okay, so when was this written? We got to know. Is this current? April 13th, guys. So this was, it's brand new. Okay. I thought we were like a day out, guys. We're reading this firsthand knowledge. Are we ready? Are we ready for some intense knowledge? Dear shareholders, as I sit down to write my second annual shareholder letter as CEO, I find myself optimistic and energized by what lies ahead for Amazon. Despite 22 being one of the harder macroeconomic years in recent memory, and with some of our own operating challenges to boot, we still found a way to grow demand on top of the unprecedented growth we experienced in the first half of the pandemic. We innovated in our largest businesses to meaningfully improve customer experience short and long term. And we made important adjustments in our investment decisions and the way in which we'll invent moving forward, while still persevering the long-term investments that we believe can change the future of Amazon for our customers, shareholders, and employees. Well, yeah, they're employees, guys, who they will not let have a union. This guy should have said, we'll let you have a union. While there were an unusual number of simultaneous challenges this past year, like people trying to get unions and boycotting. Okay. The reality is that if you operate in large dynamic global market segments with many capable and well-funded competitors, the conditions in which Amazon operates all of its businesses, conditions rarely stay stagnant for long. In the 25 years I've been at Amazon, this is a Blasky, there have been constant change, much of which we've initiated ourselves. When I joined Amazon in 97, we had booked $15 million in revenue in 1996, where a books-only retailer did not have a third-party marketplace and only shipped to addresses in the U.S. Today, Amazon sells nearly every physical and digital retail item you can imagine, with a vibrant third-party seller ecosystem that accounts for 60% of our unit sales and reaches customers in virtually every corner around the world. Similarly, building a business around a set of technology infrastructure services in the cloud was not obvious in 2003 when we started pursuing AWS, and still wasn't when we launched our first services in 2006. Having virtually every book at your fingertips in 60 seconds and then being able to store and retrieve them on a lightweight digital reader was not a thing yet when we launched Kindle in 2007. Nor was a voice-driven personal assistant like Alexa that you could use to access internet, control your home, smart home, shop, and retrieve all sorts of information. Yeah, guys, this Alexa, that was Siri in a box. Real innovative, guys. I'm telling you, innovation has to be taking what somebody else already did and just packaging it different, guys. So that's what we are doing. We are taking all this information that other people already did and packaging it different in our little brains so that we can sell it and have money. Guys, I do have coffee today. Look, squealer, D for dollar, dinero, because we're here to make money. Coffee is a struggle these days, guys. Look, you can see my coffee kind of. It's really darker than I like it. I didn't have much creamer. I'm trying to quit creamer. I'm trying to quit sugar. I'm trying to quit everything. And it leaves for a raunchy little coffee. I don't like raunchy little coffees, but I like coffee. So do I just go without coffee or do I learn to like raunchy coffee? I'm having a coffee dilemma right now. Okay, so he's talking about all the cool stuff they did. So there have also been times when macroeconomic conditions or operating insufficiencies have prevented us with new challenges. For instance, in the 01 dot-com crash, we had to secure letters of credit to buy inventory for the holidays, streamline costs to deliver better probability for the business, yet still prioritize the long-term customer experience and business we were trying to build. If you remember, we actually lower prices in most of our categories during that 10 US 01 period. You saw this sort of balancing again in, hey guys, that 01 period, 2001, that was so long ago. You know what I was doing in 01? I was supposed to be graduating from high school, but I had already previously graduated. And wow. You saw this sort of balancing again in 08 and 09 as we endured the recession provoked by the mortgage-backed securities financial crisis. We took several actions to manage the cost structure and efficiency of our store's business, but we also balance this streamlining with investment in customer experiences that we believe could be substantial future businesses with strong returns for shareholders. In '08, AWS was still a fairly small fledgling business. As we knew we were onto something, but it still required substantial capital investment. There were voices inside and outside of the company questioning why Amazon, known mostly as an online retailer then, would be investing so much in cloud computing. But we knew we were inventing something special that could create a lot of value for customers and Amazon in the future. We had a head start on potential competitors, and if anything, we wanted to accelerate our pace of innovation. We made the long-term business to continue investing in AWS. 15 years later, AWS is now an $85 billion annual revenue run rate business with strong profitability that has transformed how customers from startups to multinational companies to public sector organizations manage their technology infrastructure. Amazon would be a different company if we'd slowed investment in AWS during that '08-'09 period. Change is always around the corner. Sometimes you proactively invite it in, and sometimes it just comes a knockin'. That's me, guys. I'm your change, and here I am, just knocking away. But when you see it coming, you have to embrace it. And the companies that do this well over a long period of time, usually succeed. I'm optimistic about our future prospects because I like the way our team is responding to the changes we see in front of us. Over the last several months, we took a deep look across the company, business by business, invention by invention, and asked ourselves whether we had conviction about each initiative's long-term potential to drive enough revenue, operating income, free cash flow, and return on invested capital. In some cases, it led us to shuttering certain businesses. For instance, we stopped pursuing physical store concepts like our bookstores and 4-star stores, closed our Amazon Fabric and Amazon Care efforts, and moved on from some newer devices we didn't see a path to meaningful returns. In other cases, we looked at some programs that weren't producing the returns we'd hoped, free shipping for all our grocery orders over $35, and amended them. We also prioritized where to spend our resources, which ultimately led to the hard decision to eliminate 27,000 corporate rules. Guys, you want to know what those corporate rules were? They replaced everybody with AI. Those guys were supposed to write things and do things that the AI could do, and now 27,000 jobs, I'll bet you AI does them. There are a number of other changes that we've made over the last several months to streamline our overall costs. And like most leadership teams, we'll continue to evaluate what we're seeing in our business and proceed adaptively. We also look hard at how we're working together as a team and ask our corporate employees to come back to the office at least 3 days a week. Whoa! They said, come back or be one of the 27,000 people that got fired. 3 days a week, guys. OMG. And Amazon, weren't they the ones that were like, we are going to work remotely as long as they want. We love our employees. They don't love you. So, sorry, bump the mic, guys. During the pandemic, our employees rallied to get work done from home and did everything possible to keep up the unexpected circumstances that presented themselves. And yet we still let go 27,000 people. It was impressive, and I'm proud of the way our collective team came together to overcome unprecedented challenges for our customers, communities, and businesses, but we still let 27,000 go. But we don't think it's the best long-term approach. We've become convinced that collaborating and inventing is easier and more effective when we're working together and learning from one another in person. And guys, you can't do that on the computer. We can't work together and learn together on the computer like we're doing right now. The energy and riffing on one another's ideas happen more freely, and many of the best Amazon inventions had their breakthrough moments from people staying behind after a meeting and working through ideas on a whiteboard. I believe, guys, staying behind after a meeting, like if you have to stay behind, you have some of the most brilliant minds, that's slave labor. I said it. You shouldn't have to let 27,000 people go, force people to come back to work because it says that they work harder. No, you want less people and harder work so you make more money. Why don't people just be honest and say that? We already know that people are more productive when they're in an environment where somebody can watch them and slave whip them, right? We know that. We didn't need a study. We don't need collaborating and inventing is easier. No, it's not. It's easier when we're not at risk of fucking disease and other things that working in the office give you, like a possible shooting. But they would prefer money and their possible inventions and you staying late from breakthrough moments for them, because you're not breaking through for you. If you're at work and you have a breakthrough moment, that's a breakthrough moment for Amazon, right? I can't read any more about them staying home. I don't like that. They have an $85 billion annualized revenue run rate. 29% year over year growth on a $62 billion revenue base. But they had to let 27,000 people go, guys. 27,000 corporate roles gone. How many people were let go out of the warehouses? Probably none. You know why? Because they're lower paid jobs. This guy's a monster. I can't read this. Well, I got to read this by myself. I'll update you guys. You read it and let me know how mad you got. I'll finish these 14 pages later. He's a monster, making people go back to work after he let off 27,000 people. Are you going to say no? If your boss just laid off 27,000 people, guys, not 100,000, 1,000 people. That's 27,000 people are a whole gosh darn, like if you put them all in a place, that would be like a whole super center. You fill up a whole super center with 27,000 people. And this guy talking about come back to work 3 days a week. Yeah, or you'll be one of the 27,000 if you don't. Holy heck. Okay. So, poor Amazon. They all got fired. They all had to go back to work. So, they are going back to work though. And they're investing heavily into themselves to make money. So, what we can do really quick, let me see, Amazon. What was theirs? Like that? Was that Amazon? Yeah, Amazon. Let's check it out. They're up 3%. That's because he made that little blurb, guys. He released his little year-end report and told everybody about his billions. Let's see. Interactive chart, guys. So here's the open. 9:30. Stock market open. It opened at, what, $99 or so? And it's at $100. So had a little rise after he did that. What's their 5-day look like? Yeah, they were kind of down 1 year. In 2022, they were at 144. Everybody was up in 2022. This was the time to sell. And a lot of people did. That's why so many stocks are lower. Okay. So we kind of looked at some news. That's what we're going to do every morning. But we're going to get up earlier. We're going to look at more news, guys. More news. What do we have for world news? Let's see if anything in the world happened. Wars can guys. War can change the symbols up and down. Stock market. The Russian army failures. Look at all those tabs. What do you do with a tab? I live in Washington. I don't know anywhere where I could do with a tab. This AI's predictions are stunning Wall Street. Look at this. We need help from the AI, guys. He has an 84% proprietary advanced AI brain, pinpoints where the market is going up with 87.4% proven accuracy 1 to 3 days before it happens. When Vantage Point's advanced AI brain recently predicted 4 trend reversals for Moderna, investors had the potential to capture 316% in gains. But unfortunately, many retail investors failed to take it seriously and missed out. Wow. You guys see how they highlighted the ups? Now, I don't know for sure, but this is like a MACD line. This is what I learned. A MACD, if it's above, that means that it's in the positive, it's growing. And if it's below, that means it's negative. See, in the red, it's downward trend. If it's on top of the line, see the blue one is on top, and here the blue one is on bottom. You guys see that difference? Can I zoom? Is there a zoom? Zoomy, zoom, zoom? No, I can't zoom. But you guys should be able to see this. See the black on the bottom, blue on the top? If the blue is the MAC line, that means it's going up. If the blue is on the bottom, that means it's going down. Perfect. Those are just free things. Don't buy all those things, guys. We're just looking at them. I believe that. Half people can't pass the common sense test. Right? Half of people, I'd say 10% of people can't pass it. North Korea shooting missiles still. Look at Putin. Look at him. Look at that guy. This guy's a pure devil. I said it. Feinstein. She got the shingles, guys. Ooh. Hey, it's Guy Fieri. Okay. World news. Nothing. Now let's bop over here and learn about some chart patterns. We have to get the words down, guys. The more we hear these words, the better off we'll be. So, see what we're getting into. It's a lot of charts. It's not a lot, you guys. Just don't get all worked up thinking it's going to be a long one. Just gonna bop in here and learn about stock pattern charts. Adam Hayes, look at him. Look at him. He's ready for us. You guys see him? He's got 15 years Wall Street experience. He's traded derivatives. Okay. Stock chart patterns often signal transitions between rising and falling trends. A price pattern is a recognizable configuration of price movement identified using a series of trend lines and or curves. So stock pattern charts. Transitions between rising and falling trends. A price pattern is a recognizable configuration of price movement identified using a series of trend lines and or curves. Okay. When a price pattern signals a change in trend direction, it is known as a reversal pattern. A continuation pattern occurs when the trend continues in its existing direction following a brief pause. There are many patterns used by traders. Here's how patterns are made and some of the most popular ones. Key takeaway. Patterns are the distinctive formations created by the movements of security prices on a chart. And we will be talking about these a lot, guys. So we're going to go over them and learn these patterns, and are the foundation of technical analysis. And we have to be able to do technical analysis and risk management to make our money. Do not forget those two words. A pattern is identified by a line connecting common price points, such as closing prices or highs or lows during a specific period. Technical analysis and chartists seek to identify patterns to anticipate the future direction of a security's price. So many P's. Patterns to anticipate. These patterns can be as simple as trend lines and as complex as double head and shoulders formations. So, trend lines and technical analysis. Since price patterns are identified using a series of lines or curves, it is helpful to understand trend lines and know how to draw them. Trend lines help technical analysis spot support and resistant areas on a price chart. Trend lines are straight lines down on a chart by connecting a series of descending peaks or ascending troughs. Troughs. I said troughs. What the heck am I reading? What's a trend line? Trend lines are easily recognizable lines traders draw on a chart. So if you draw it on a chart, it's a trend line. Okay. Connects highs, connects lows. Got it. A trend line that angles up or an uptrend line, a trend line that angles up, or an uptrend line. Why couldn't they? Occurs where prices are experiencing higher highs and higher lows. The uptrend line is drawn by connecting the ascending lows. Conversely, a trend line that is angled down, called a downtrend line, occurs where prices are experiencing lower highs and lower lows. So, trend lines will vary depending on what part of the price bar is used to connect the dots. While there are different schools of thought regarding which part of the price bar should be used, the body of the candle bar and not the thin wick above and below the candle body often represents where the majority of price action has occurred, and therefore may provide a more accurate point on which to draw the trend line, especially on intraday charts where outliers may exist. Data points that fall way out. So don't draw through the candle bar. No, don't draw through the wick. Draw through the candle bar. More accurate if you're a intraday trader. Okay. On daily charts, chartists often use closing prices rather than highs or lows to draw trend lines, since the closing prices represent the traders and investors willing to hold a position overnight or over a weekend or market holiday. Trend lines with 3 or more points are generally more valid than those based only on 2 points. Uptrend occurs when prices are making higher highs and higher lows. Uptrend lines connect at least 2 of the lows and show support levels below price. Downtrends occur when prices are making lower highs and lower lows. And don't worry, guys, if this just sounds like a bunch of lower, higher, we are going to go over it. We're going to look at it. We're going to draw it. We're going to touch it. We're going to feel it. And you will understand it. So, downtrend occurs when prices are making lower highs and lower lows. Downtrend lines connect at least 2 of the highs and indicate resistance levels above. So, support levels from below, resistance from above. Consolidation, or a sideways market, occurs where price oscillates in a range between 2 parallel and often horizontal trends. So let's see if they have a picture. Consolidation. You got a picture for me? No picture, guys. I didn't care about giving us a picture of consolidation. Sometimes pictures help. Okay. So, continuation patterns. A continuation pattern can be considered a pause during a prevailing trend. This is when the bulls catch their breath during an uptrend, or when the bears relax for a moment during a downtrend. So when they're going to catch you with their horns to go up, or when they're bearing down on you, they relax. Okay. While the price pattern is forming, there is no way to tell if the trend will continue or reverse. As such, careful attention must be placed on the trend lines used to draw the price pattern and whether the price breaks above or below the continuation zone. Technical analysis typically recommend assuming a trend will continue until it is confirmed that it is reversed. In general, the longer the price pattern takes to develop and the larger the price movement within the pattern, the more significant the move once the price breaks above or below the area of continuation. So, the longer it goes straight, usually, the more it's going to move up or down. Okay. If the price continues on this trend, the price pattern is known as a continuation pattern. Common continuation patterns include pennants, constructed using 2 converging trend lines, flags drawn with 2 parallel trend lines, wedges, constructed with 2 trend lines that would converge if they were long enough, where both are angled either up or down. Triangles are among the most popular chart pattern used in technical analysis, since they occur frequently compared to other patterns. The 3 most common types of triangles are symmetrical triangles, ascending triangles, and descending triangles. These chart patterns can last anywhere from a couple of weeks to several months. Reversal patterns. A price pattern that signals a change in the prevailing trend is known as a reversal pattern. So if it signals a change, reversal. These patterns signify periods where the bulls or the bears have run out of steam. The established trend will pause, then head in a new direction as new energy emerges from the other side. So a bull or a bear. For example, an uptrend supported by enthusiasm for the bulls can pause, signifying even pressure from both the bulls and the bears, then eventually give way to the bears. This results in a change in a trend to the downside. So they're saying that it could be straight for a long time, like it could be completely straight. Let me see. Oh no. So I know that this is fake, but it could look straight like this and then start to curve up. So a reversal pattern is when it starts to go, guys, starts to go up. When it was straight for a while, it's like straight, and then it goes up, reversal. We got this. This is easy to understand. For example, an uptrend supported by enthusiasm from bulls can pause, signifying even pressure from both the bulls and the bears, then eventually give way to the bears. This is in a trend to the downside. So the bears take over and it trends down. Okay. Reversals that occur at market tops are known as distribution patterns, where the trading instrument becomes more enthusiastically sold than bought. Conversely, reversals that occur at market bottoms are known as accumulation patterns, where the trading instrument becomes more actively bought than sold. The longer the pattern takes to develop and the larger the price movement within the pattern, the larger the expected move once the price breaks. So big moves mean big volatility, mean big money, guys. So if we're looking for things that move volatility, we're looking to make a bigger money, right? Which is more risk of losing your money. So we have to be on top of our rules, which we're going to make this week, guys. We are doing all of this because we need to learn to make our trading rules. Trading rules are for risk management so that we know what to do and what we're going to do in event of these type of patterns. We'll know what to do. We'll have our rules. Everybody needs rules, guys. So this week we will be making our rules. Stick around. Make sure you're here so you can have a say in our rules. How much should our risk management be? How much should we start our account with? I'm thinking $1,000, maybe $1,500. You guys, this is what we're going to do this week. So make sure you are here every single day or watch the video, because by the end of the week, we should have our rules in place to start making trades. And once we start making trades, who knows how fast this is going to go. Reading is always just the basic, guys. But once we get into the machine, things start happening really, really quickly. So I hope that you're here. I hope that you come back. And I hope that you have some ideas, because it's a lot of work, guys. When a price reverses after a pause, the price pattern is known as a reversal pattern. Examples of common reversal patterns include head and shoulders, signaling two small price movements surrounding one larger movement. Okay, that makes sense. So a head and then the shoulders. So the head would stick out over the shoulders. That would be smaller movements. Makes sense. Double tops, representing a short-term swing high, followed by a subsequent failed attempt to break above the same resistance. And a swing high, guys, is a term used in technical analysis. It refers to a peak reached by an indicator before a decline. So a swing high is before a decline. Okay, we got that. So before it swings high, the highest one before a decline. Swings high before a decline. Maybe we should zoom in more. I'm still not good at this. No. Okay, we will get this. What happened? What happened to my chart? Restart, guys. If you ever get lost in a chart, just restart the chart. Sometimes double clicking. I don't know if double clicking actually works on Amazon to reset it. Let's see. It doesn't highlight the way that TD Ameritrade does, so I don't think it doesn't reset the way that TD Ameritrade does either. So we got to learn multiple maps and charts. That's okay. So a swing high forms when the high reached is greater than a given number of highs positioned around it. So it's the highest high. A series of consecutively higher swings highs indicates that the given security is in an uptrend. Makes sense, guys. There's a lot of high highs. It's going high, right? A swing high can occur in a range bound or a trending market. Swing highs are useful to identify and use when trading in ranges, or when utilizing technical indicators. Analyzing swing highs help the trader determine trend direction and trend strength. The opposite of a swing high is a swing low, and I'll bet you guys that's when it's a low. A bunch of low lows mean it's what? Trending low. This is so easy. High, swing low. It's like we're learning a whole new language here, guys. A swing high is a technical indicator signaled by a price peak followed by a decline. So if it's high, higher swing highs are associated with uptrends, and lower swing highs are associated with downtrends or a loss of momentum in the uptrend. How far swing highs are apart may provide insight into trend strength. A swing high that is much higher than the prior swing high shows buyers are eager to get in. Swing highs are useful for determining trend direction and strength and entering or exiting trades. They're also applicable to analyzing indicators. How a swing high works. Once the price moves above a recent high, a new swing high is underway. The exact high point of that swing high is not known until the price starts dropping. Once the price starts dropping, the swing high is in place and the trader can note the swing high place. Okay, so once it moves above a recent high, a new swing high is underway. This is called a higher swing high because the swing high occurs above the prior swing high price. So they just keep getting higher and higher, guys. Higher swing highs are associated with uptrends since the price keeps moving to higher and higher prices. How far swing highs are apart is a sign of trend strength. If the most recent swing high was far above the prior swing high, that shows the asset has a lot of buying interest and strength. If a swing high forms just barely above the prior swing high, the price may still be in an uptrend, but it's not moving as strongly as the asset that made a much higher swing high. If the swings cease to reach new heights, it could signal a downtrend or an uptrend that it's lost its momentum. Let's see. Okay, so this would be considered a swing high. It's higher than the other highs around it. And this would be a swing high. Yeah. And then it went down below the swing highs. So it's either on a continuation, because these swing highs, what are they, pretty close, we would say? Oh, look, I figured it out. Yay me, you just grab it. Ooh, my goodness, guys. You just hold it. Hold click. Oh, look at that. It's so nice. Oh, my gosh. Oh, my gosh. You learn something new every day, my friends. Look at this map. Look at this chart, how it moves. Holy downtrend. Okay, so this is a downtrend. Let's see if we can find some higher highs that are lower. So this is a higher high that's lower. You see that? This one. Higher high. I don't know. We'll get better at it, guys. It's going to get easier. Don't you worry. So, trading swing highs. Swing highs can be used for multiple analytical purposes in trading. Here are a few ideas on how to use them. When trend trading, swing highs in an overall downtrend form an end of a retractment. What's a retractment, guys? It's a minor pullback or change in the direction of a financial instrument, such as a stock or an So if we have a change in direction, it's called a retractment. Okay, change in direction, retractment, guys. Okay, so traders could take a short position once a swing is high in place and momentum reverses back to the downside. Indicators and Japanese candlestick patterns could be used in conjunction with a swing high to increase the chance of a successful trade. For example, a trader could require that the relative strength index, the RSI, is above 70 when the price makes a swing high, and that a 3 black crows candlestick pattern or another bearish pattern, we don't even know what a 3 black subsequently appears to confirm a return to the overall downtrend. 3 black crows. What are 3 black crows? 3 black crows is a phase used to describe a bearish candlestick pattern that may predict the reversal of an uptrend. Candlestick charts show today's opening, high, low, and closing prices for a particular security. For stocks moving higher, the candlestick is white or green. When moving lower, they are black or red. The black crow pattern consists of 3 consecutive long-bodied candlesticks that have opened within the real body of the previous candle and closed lower than the previous candle. Often traders use this indicator in conjunction with other technical indicators. You know I got to see it, guys. Let's look at... I can't spell. 3 black crows. I got to see it. 3 black crows on a Vestopedia. There it is, guys. Look at this. 3 black crows. Woo! And then that says 3 black crows tell us what, guys? 3 black crows tell us the reversal of an uptrend. So reversal means it's going to go back down, guys. So if it was going up and then you get a black crow and a black crow and a black crow, these are called black crows. I like that. I want to see if we got a black crow. There's no black ones on here. Does this map not have black, or does Amazon not have any black crows? Let's see if we can pick a different stock. Let's try Crido. Okay. Any black crows here? Maybe they don't have black. I don't see any black, but there's red. Could they be red crows? Can it be red crows? I better put 3 or they're going to think we're talking about some crazy. Well, it doesn't say anything about red crows. I don't think it is red crows, guys. Okay, well, black crows. Okay, the black crow pattern consists of 3 consecutive long-bodied candlesticks that have opened within the real body. Okay. 3 black crows is a bearish candlestick pattern used to predict the reversal of a current uptrend. Traders use it alongside other technical indicators such as the relative strength index. The size of the 3 black crow candles in the shadow can be used to judge whether the reversal is at risk of a retractment. The opposite pattern of 3 black crows is 3 white soldiers. I like it. 3 white soldiers. 3 white soldiers. There's no three white soldiers. Maybe they have to be big. I gotta look it up, guys. You know I gotta look up 3 white soldiers. Man, we're learning the coolest. 3 black crows, 3 white soldiers. No wonder trading is so fun. Guys, you gotta use cool words like this. Let's check out these 3 white soldiers. My dog is scratching me up. You guys, come here, Butters. You guys want to meet Butters? I'm gonna let you meet my Butters. Come here, Butters. Come here. Oh. This is my morning friend, guys. Yep. Hold on, Butters. She's stuck in my hair. That's what happens when you have 10 feet of hair. Okay, Butters. This is the microphone. Say, hello, everybody. Tell them, hello, neighbors. Ready? Tell them, hello, neighbors. Doesn't she look cute, guys? Oh, look, hold on. Let me move this. Look at this little dog. Butters. Say, hello, neighbors. Tell them. Come on. Bobby, look right here. What's that? What's this? Oh, it's your little Butters. Yeah. So that is the Butters Money Team dog, guys. That's our mascot, guys. Butters, the money dog. Okay. So, guys, look. White soldiers. Where's the white soldiers? 3 white soldiers. It's not really an uptrend. Where are 3 white soldiers? I was so excited to see 3 white soldiers, and then Butters came over. I don't know. They didn't really point it out. Right here, up here. They do have to be big, guys. Big soldiers. Look at these big soldiers. I was looking at these little tiny babies. Don't look at the babies. Look at the soldiers. And the crows are big too, guys. So big changes. Big changes. Okay. So we know about the soldiers. We know about the black crows. So 3 black crows are a visual pattern, meaning that there are no particular calculations to worry about when identifying this indicator. The 3 black crows appears when bears overtake the bulls during 3 consecutive trading sessions. The pattern shows on the pricing charts as 3 bearish long-bodied candlesticks with short or no shadows or wicks. In a typical appearance of 3 black crows, the bulls will start the session with the price opening modestly higher than the previous close, but the price is pushed lower throughout the session. In the end, the price will close near the session low under the pressure from the bears. So it closes low under the pressure of the bears. Bears, remember, guys, bear down on you. Bear down. Bear down. Just remember that. and the other one goes up. This trading action will result in a very short or non-existent shadow. Traders often interpret this downward pressure sustained over 3 sessions to be the start of a bearish downtrend. So if you see these, you might get a bearish downtrend, my friends. Okay, how to use it. As a visual pattern, it's best to use 3 black crows as a sign to seek confirmation from other technical indicators. The 3 black crows pattern and the confidence a trader can put into it depends a lot on how well formed the pattern appears. The 3 black crows should ideally be relative long-bodied bearish candlesticks that close at or near the low price for the period. In other words, the candlestick should have long, real bodies and short or non-existing shadows. If the shadows are stretching out, then it may simply indicate a minor shift in momentum between the bulls and the bears before the uptrend reasserts itself. Volume can make the 3 black crows pattern more accurate. Volume during the uptrend leading up to the pattern is relatively low, while the 3-day black crow pattern comes with relatively high volume during the sessions. In this scenario, the uptrend was established by a small group of bulls and then reversed by a large group of bears. So what they mean by volume, guys, why doesn't Yahoo have volume? It's little volume, guys. There it is. There's volume. Let's go back to a better, let's go back to Amazon. Amazon have more volume. This one doesn't have very much volume. See, guys, this on the bottom, all these little marks, these are volume. How much is sold? Red is being sold. Green is being bought. Those are volume down there. How many are being bought and sold at the moment? So you see how Amazon has a lot down here? If we go back to this one that costs $1.72, it's called Altamira Therapeutics. Altamira Therapeutics has very low volume. You see this right here? Somebody bought a lot, guys. This is the volume. That's volume. Not very much down there. You guys see that? And we bought back over to Amazon. You see their volume. You look at all that volume. So, volume. Okay. So, of course, with markets being what they are, that could also mean a large number of small bullish traders running into a smaller group of large volume bearish traders. The actual number of market participants matters less than the volume each is bringing to the table. So it doesn't matter if it's a bunch of people buying 1 or 100 or a bunch of people selling like a billion. Okay, the opposite of the 3 black crow patterns is the 3 white soldiers pattern. And there we are, guys. We know 3 white soldiers marching down the road, gonna make an uptrend, marching down the road. Okay, so which occurs, those at the end of a bearish downtrend and predicts a potential reversal high. So if you see 3 white soldiers, good may be coming, guys. This pattern appears as long as 3 long-bodied white candlesticks with short or ideally non-existing shadows. The open occurs with the previous candlestick's real body, and the close occurs above the previous candlestick's close. So, any soldiers? Any soldiers here? Remember, we can, I don't remember. Soldiers. And these are the shadows, guys. You see the candlestick thing? They consider that as a shadow. Okay. The 3 white soldiers are simply a visual pattern indicating the reversal of a downtrend, whereas 3 black crows indicate the reversal of an uptrend. The same caveats apply to both patterns regarding volume and confirmation from other indicators. So the limitations of using 3 black crows. If the 3 black crow pattern involves a significant move lower, traders should be wary of oversold conditions that could lead to consolidation before a further move lower. The best way to assess the oversold nature of a stock or other asset is by looking at technical indicators such as the relative strength index, where a reading below 30 indicates oversold conditions, or the stochastic oscillator indicator that shows the momentum of movement. And we're going to come back to these tomorrow and go over these different indicators, okay? We're going to go over indicators tomorrow. I'm going to write it down in my book so that I don't forget. We'll do, what is today, guys? Is it Thursday or is it Wednesday? It's Thursday, huh? So we're going to do indicators on Friday. There we go. Look at that, guys. I got my handy little notebook and my little bad handwriting, and I put indicators on Friday. So We'll learn these indicators. Many traders typically look at other chart patterns or technical indicators to confirm a breakdown, rather than using the three black crows pattern exclusively. As a visual pattern, it's open to some interpretation, such as what is an appropriately short shadow. Also, other indicators will mirror a true three black crow pattern. For example, a three black crows pattern may involve a breakdown from key support levels, which could independently predict the beginning of an intermediate term downtrend. The use of additional patterns and indicators increases the likelihood of a successful trade or exit strategy. Real world example. In the third week of May of 18, a three black crows pattern appeared on the GBP weekly price chart, representing an ominous sign for the currency pairing. Analysis speculated that the three black crows pattern indicated that the pairing would continue to trend low. Three factors were analyzed to determine that the three black crows pattern signaled a continuing downturn. The relatively steep upward trend of the bullish market, the low wicks of each candle indicating a small difference between close and week's low, the fact that while the candles did not gradually elongate, the longest candle was the third day. Hire a pro. Is that it? Oh my goodness, we made the end, guys. So, finding the right financial advisor fits your needs. We are not going to do that right now. If you want to do that, you do that, and then you guys let me know what you learn. You throw your nuggets back this way. What I do want to look up, where was that? Let's look up Black Crow stocks now. Maybe you'll show some stocks. No. Okay, well, I was hoping it would show us one. Like, take a check at this Black Crow stock. But no. Okay, so that was it for that. Interactive stocks. I'm going to set this up. We're going to bop into TD Ameritrade. I promised a little bit of Thinkorswim, guys. Here we are. This is my Thinkorswim. Up here is my buying power, my fake money. This is right here, fake money. I wonder why it doesn't show it shows what I'm doing, but it doesn't show. Weird. So you guys can see what I'm doing on the screen, but it doesn't have a pointer. I don't have a pointer? Is it only on this? Sorry, guys. I got to look. Do I have a pointer when it comes to three black crows? I got to see. Oh, that's my chat. I can't get you back.
What's happening?
Oh boy, guys. Technical difficulties. What's happening? That's my chat, guys. It does not want to go back. It said, no. That's fine. Whatever. There we go. I don't know why I don't have. Oh, there. Look, it's back. Yay. Sorry, guys. I don't know what happened to my pointer, but I see it now. I didn't see it before. Okie dokie. So here, guys, this is my account information right here in this left-hand corner that says how much paper money we have available to us. This section is our live news. We have a level 2, and level 2 shows us the difference between the bid and the spread. We can add more down here. We have a watch list, and sometimes I have my handy-dandy calculator. Oh, we already had it. You can take them off right here like that. Just take it off. And then you can little it. Where did my level 2 go? Just like that. And you can just little these guys and keep them out of the way. and that helps. And then, so we're just getting more comfortable. Remember, guys, I told you these tabs up here are important tabs. Monitor, this is where our trades are going to be for the day, activities and positions, account statements, any of that. Here's the trades. These are the trades we made. Look, guys, any trades, weeklies, option chains. I don't know how to trade options on here. We're going to learn, but I don't know how. Do not forget about the education channel. Get into your TD Ameritrade. Open it up and go into this education tab right here. Go to this, how to think or swim. Go to this and do all of these trading how-tos. Do the Think Manual. Do mobile trading. Do the PDF guide. Do them all, guys. The more we learn this, the more money we will make. There's technical analysis. We can learn patterns, guys. These are the patterns we were looking. Technical indicators. Patterns. Here's the classic patterns. We can learn all the classic patterns. What do we want to learn? So we just go to the patterns. On this page, you'll find information on how to search for classic patterns. General information and terms are explained in the introduction. Learn how to use classic patterns in Stock Hacker. So we just click the patterns button. Select patterns. A window will appear. Oh, wow. And then you just look at all these different patterns. Channel up, descendant triangle, and we can add all of these. Where's classic? I don't see it. Above the chart. I'm looking. Patterns. Woo! Look at all these patterns. So you can check out, look, the flag is a relatively rapid formation that appears as a small channel after a steep trend, which develops in the opposite direction. After an uptrend, it has a downward slope, and after a downtrend, an upward slope. The preceding trend is crucial for the pattern formation. It's often called a flagpole. We can learn every single type here, guys, right here. Just click it. And it shows you head and shoulders. Remember we learned about this one. Where the head is higher than the shoulders, they're all above your RSI. What about inverse head and shoulders? Upside down. What about a pennant? What's a pennant look like, guys? Oh, it does. It looks like a flag flying, like what you hang on your wall for, like, it says Michigan State. A rectangle. There we go. Stays within. A rising wedge. Going up. A triangle. Just to the side. Not quite a pennant. A triple bottom. A triple top. Wait. So a triple bottom went down like a W. And a triple top went up like an M. Oh. Double top. It's like an M. I bet it's a W. Double bottom. W. Descending triangle. I guess. Channel up. Channel down. Ascending triangle. So this is where it goes up. And the descending triangle is where it's going down. Okay. Look at all those patterns, guys. We just saw all the patterns super quick. It's right here. It's under patterns. There's studies here. You can add a study. So I told you we were learning. Let's see. What do they have that we have learned? Okay. Trend studies. Let's see what they got. Oh my goodness. Look at all these studies, guys. Trend studies. The only one I know for sure, guys, I heard of a MACD line. Remember I told you? This is the MACD line, and it puts it right down here. And you could just add that study in. You can add whatever you want. You could do drawings. You could use the drawing tool. Oh, look at this, guys. We could draw on here. Okay, wait. Hold on. I don't know what I'm doing. Hold on. Oh, this is a pointer. A pointer. I love it. You can do text. Oh my gosh. Oh my goodness. Look at. Ah! I can't even deal. Oh, no. I gotta get back to my finger. Look, it says Squealer D. Wow, guys, with so much stuff we didn't know. You got drawings. You can do drawing tools. What else can we put with the drawing tools? A GAN fan. I want a GAN fan. Oh. Wow, look at this fan. Oh, wow. Ooh, it's so pretty. Oh, look at it. Yay, I got that stupid face on. The one where you look real amazed at non-wonderful things. I don't know, guys. I think it's pretty great. What is this? It's a pitchfork. Wait, how do I... Let me go back. I need a pitchfork. You guys seen the pitchfork? Remove my drawings. Clear drawings. Okay, get a new one. I want the pitchfork. Pitchfork. Oh, you guys seen it happening? Okay, it's happening. I don't... Oh! You guys see that? It made a pitchfork. Oh. Wow. That's how these tools get on there. Undo. You see how quick that was? I wonder if you can adjust it. Edit properties. Nope. Can we grab it and move it? Nope. Okay, let's remove that drawing. Remove drawings. Clear drawing set. Yes, clear it. Okay. Well, that was really, really informative today, guys. We learned some drawings. We learned studies are up here. We're going to learn these studies, at least some of them, before we come into here. We're going to learn these patterns. We're going to go over the patterns several more times. And we're going to do indicators on tomorrow. So I will see you all back here tomorrow in the morning, same time, same place. Be there or be square. I hope you have a wonderful rest of your day. Stop back by. We have some more gaming lives. If you are a gamer, you should be there or you will be square. We do some Fortnite. Sometimes I play COD, but guys, this COD is down bad. It's down real bad. So I've been playing Hogwarts. This is a magical world. It's almost as magical as this money world. So if you want to check that out, that is great. And if not, maybe you can just check a Just Chatting and we will come in and talk about news and things like that. It's up to you. But like I said, you do want to catch my lives. You'll never know the nuggets of information you'll find in them. And it's enjoyable. So I will leave you guys there for today. Have a wonderful rest of your day. And I will